In this video, I'll explain exactly what is behind the idea of a payday loan, and we're starting right now. So everyone watching this video is likely familiar with all the typical financial services. You've got your banks, credit unions, and all the usual financial tools like credit cards, debit cards, and paying your bills through Venmo, Zelle, or Apple Pay. This is a world where checking, savings, money market, and investment accounts are all part of day-to-day life. This can be collectively referred to as the prime economy. There's another financial world out there, however, just below the visible one, and it's referred to as the subprime economy. There is far less usage of common financial tools, more reliance on cash, and unfortunately a lot of high interest rate products and services that often border on predatory lending. The subprime market caters to people who are considered far greater risks for default, either due to a poor credit history or limited resources, and it's a huge market with around a third of all US adults having a subprime credit score. It's in this world that payday loans reside. Simply defined, payday loans are short-term, high-interest loans that lenders make based on income, with the amount of the loan generally equal to a portion of the borrower's paycheck. Payday loans can provide quick cash, but they charge very high interest rates and can be considered a form of predatory lending that I mentioned earlier. Payday loan lenders are actually only able to operate in 32 states, with the remaining states either restricting the practice or outright banning these types of loans. Despite this, payday loans are a vital lifeline for many people who use the money to pay day-to-day bills, and in 2024, about 12 million Americans took out a payday loan. The reason these loans are referred to as payday is because of how the whole concept is used by the borrowers. They come into the service center and take out a small amount, $300 to $500 is a typical, which is meant to get them through the next paycheck. The loan is unsecured, but the borrower does need to leave their bank account number, and the loan amount plus the fee is withdrawn on their payday. Fees for these loans are quite steep, in the order of $10 to $30 for every 100 borrowed, which works out to an APR of anywhere from 300 to 600%, which is rather astronomical, even if the loan term is only for 2 weeks or less. These loans are intended for unexpected emergencies, but a significant majority of borrowers use them for day-to-day expenses and get trapped in a never-ending cycle of borrowing. Clearly, payday loans are not an optimal way to borrow money, and it's no surprise that 18 states restrict or outlaw this type of lending. So what are the alternatives if you have bad credit and limited resources? There are a few other options, and while none of them are ideal, they're certainly better than the astronomical interest charged by payday loans. If you have a credit card, that can be used for bills and cash withdrawals, as unlike payday loans, credit cards are bound by upper caps on what interest rates they can legally charge. There's also something called hardship loans that are offered by banks and credit unions. They are essentially personal loans specifically for those who have had a job loss, illness, emergency home repair, or other personal difficulties. They feature reasonable rates and short repayment terms, but you will have to prove that you're facing a genuine financial difficulty. There are other options such as pawn shop loans and title loans. In both cases, you're leaving your property as collateral, which in the case of a title loan is your car title. Finally, there are emergency loans for those with bad credit, and while their APR can go as high as 36%, it's still on par with credit card cash advances, and they're also a lot better than payday loans. Okay, that was a quick explanation of what payday loans are all about and what alternatives exist. As always, if you enjoy this content, please do like and subscribe, and I'll see you in the next video.